what is Bitcoin? Now, to simply put, Bitcoin is a digital currency similar to fiat currency, like the British pound, the US dollar, the euro, but only that it is not tied to any government or any geographic region. So Bitcoin is a digital global currency, and that is a very big distinguishing factor. The Bitcoin white paper was actually published in October 31st, 2008 by unknown people using the alias Satoshi Nakamoto. Now, no one knows who Satoshi Nakamoto is. Their identity is actually kept hidden, even in today's internet age. And actually, the Bitcoin network was launched on January the 3rd, 2009. Now, I provided a link to the Bitcoin white paper. The Bitcoin white paper is essentially a paper, a thesis on what Bitcoin is actually meant to be about. I definitely would recommend you reading the Bitcoin white paper. In short, Bitcoin is a global payment system that lets you send money over the internet without the need for a third-party intermediary. Now, this is so important because many people think that Bitcoin is a fad, Bitcoin is a scam, Bitcoin is just wizard money. It's not going to stay here. When you actually look at the history pre-existing Bitcoin, starting from 1973, there's a lot of research that has led to the development of Bitcoin as we see today. From the earliest works of Sirfin Khan, of Ralph Merkle, of Murray Rothbard, to recent additions like Adam Back, Nick Szabo. You've got a lot of these different researchers that have provided papers on different aspects of cryptography, to algorithms, to essentially proof of work. All of these terminologies I'm going to go over in the next few slides, but essentially there's a lot of research that has led to the development and creation of Bitcoin as we see it today. Now, moving forward, how does Bitcoin work? So simply put, Bitcoin uses cryptography, which is, if you think about cryptography as being an encryption, well, it's not an encryption, but let's just think of it for, kind of example purposes. Cryptography is a form of encryption that secures transactions. These transactions are recorded on a public distributed ledger called the blockchain. You've probably heard blockchain here and there, but essentially the blockchain is a group of blocks, and within these blocks are transactions. And I'm going to go over that in more detail in the next few slides. But effectively, every 10 to 15 minutes, the entire Bitcoin network agrees on what transactions have happened without the need of a central authority by simple election that occurs electronically. And that means that there's no one in the middle of these transactions and verifying the transactions. Through this simple mechanism, Bitcoin is able to allow a completely decentralized network of computers to agree on what transactions have happened on the network and essentially agreeing on who actually has the money. Now, moving on to actually how the Bitcoin network works. Well, let's say you're on your computer or your mobile phone and you send a transaction in Bitcoin. That Bitcoin transactions gets broadcasted to all the networks, to all the computers, which in this case is called a node. The miners, Bitcoin miners, which are essentially computers dedicated to verifying these transactions, have to solve complex algorithms to find a solution called a hash. Finding a hash then creates a block that is used to process transactions, and each new block is added to the blockchain, and then the transaction is complete. Now, to put this in really simplest terms, let's compare how this network works with a centralized financial system. So above, we see the similar example of what I mentioned previously, which is where, let's say you're sending money overseas, you actually have to liaise with your bank. That bank has to liaise with the into financial intermediary, that financial intermediary to the bank of the receiver, to then receive on the other end. With Bitcoin, you can send anyone Bitcoin without the need of a third party. All it does is that you send Bitcoin, miners then have to verify the transaction to ensure that it's not fake, to ensure that the actual transaction is legitimate. And the fastest miner, which is essentially a computer that solves these transactions in the correct order, then gets a Bitcoin reward. Now I'm going to touch this more on how the reward system works later, but effectively this whole system allows the network to be self-sustaining, to be incentivized by being truthful and by having a democratic election of what transactions are real and what are not real transactions. So in short, what I want you to get from this slide is Bitcoin takes out the middleman, and essentially you can send any money using Bitcoin network to any other person without the need for a third party. Now, sending Bitcoin is similar to sending an email. All you need is a Bitcoin address. Now, Bitcoin or BTC addresses typically start with 1, 3, or BC1. Now, here is an example of a Bitcoin address, which it starts with BC1. It's typically, 25 to 35 characters long and has a series of numbers and letters. With this address, you can send Bitcoin to this address from any point in the world to any other point in the world instantaneously for minimal fees. Now, similar to buying Bitcoin, similar to sending Bitcoin, to buy Bitcoin, you need to use an exchange on the internet. Let's say you want to go internationally to another country. And what you need to do then is you need to go to a local exchange and exchange your local currency to the currency that you want to visit in. It's a similar concept for Bitcoin. You need to go to an online exchange, then you can buy Bitcoin at the current exchange rate against GBP, for example. So that's actually how to buy Bitcoin. Now, the most important thing is, how does Bitcoin solves these societal problems that we mentioned in the first section of this presentation? This is where you'll be able to understand the true value of Bitcoin, not just as a payment network and as a global decentralized economy, but actually how does it solve the inefficiencies of the existing money infrastructure. So let's deal with corruption. Because Bitcoin is essentially using cryptography, encryption, algorithms, computers, it's establishing a new trust system entirely. Bitcoin is not issued by any central authority, rendering them immune to government interference or bank manipulation. Now, because Bitcoin transactions are public for everyone to see, there is greater transparency. So governments or financial bodies will come under greater financial scrutiny. The next is surveillance. So Bitcoin actually provides more financial privacy, although, as I mentioned before, all Bitcoin transactions are public in a blockchain ledger. These transactions are not tied to anyone's real identity. So this means that Bitcoin is pseudonymous. So it's fairly private and fungible because each Bitcoin is equivalent or roughly equivalent to each other Bitcoin. Now, the enhanced anonymity of Bitcoin potentially offers the same benefits as actually raw cash, physical cash, or even gold to people to people all around the world. But additionally, it's actually relatively easy to transfer. You can actually transfer large quantities of money using the Bitcoin network without any government interference, without any surveillance on your transaction. Now let's deal with monopoly. Now, how does Bitcoin deal with the government monopoly on cash? Well, Bitcoin removes the need for financial intermediaries. Bitcoin derives its trust from cryptography. These are simple mathematical rules, so you actually don't need a financial intermediary to verify your transaction. Bitcoin actually uses something called keys. So it allows people to become sovereign and own their own money. If you have a public and private key within your wallet, then you actually own your own money. That means that you don't need to trust someone else to send or hold your money for you. Bitcoin is also global money. It's actually faster. It takes roughly 10 to 15 minutes on average for a Bitcoin transaction to go through. Comparing that to a couple of days when you're transferring money overseas, Bitcoin is relatively faster. It's relatively cheaper. The transactions fees are minimal. And actually, it's safer to transact across borders because Bitcoin is not locally governed, is not locally created. It's a global digital currency. The concept of borders is not actually accepted within Bitcoin. And actually, last and not least, Bitcoin is transferable or easily transferable. Because Bitcoin is digital, you can transfer it to anyone, anywhere, 24/7. Whereas the current financial infrastructure doesn't allow that to happen. Now, on the right, I want to give you an example of actually the value that Bitcoin brings. In April 2020, someone sent 1.1 billion in Bitcoin, which is roughly 161,500 Bitcoins, to another wallet overseas and only paid 68 cents in fees. Can you do that with the current existing financial system? No, you can't. And if you can, it won't cost 68 cents. I can rest assured that. And also the fact that it got there within 10 minutes without any one single authority verifying that transaction. That is the power of Bitcoin. How does it solve money inflation or quantitative easing? Well, every day, new Bitcoins are produced as a bounty to miners who secure transactions. As I mentioned previously, when you make a transaction on Bitcoin, Bitcoin miners, which are specialized computers, actually secure these transactions on the blockchain on a public distributed ledger. So basically, these miners who solve these complex problems the fastest get rewarded with some Bitcoins. Now, the amount of Bitcoins awarded to miners halves every 4 years. Now, this is going to be a little bit too technical, but essentially what I want to get from this slide is Bitcoin will asymmetrically reach 21 million Bitcoin at the end of 2140, roughly. So by 2140, there will only be 21 million Bitcoin, and that's the maximum it can ever achieve. This means that Bitcoin is limited and in supply. There is no, oh, let's create more Bitcoin out of thin air. Bitcoin is backed by, these miners, nodes that verify the transactions and the actual usage of Bitcoin as a money system. The value comes from people actually using it as a currency and as money. That's where Bitcoin's value comes from. And actually, if you can see where we are in terms of, the trajectory of the supply of Bitcoin, we are roughly in 2021, which is where, Bitcoin creates a certain amount of blocks, 630,000 blocks per year. Now, this also means that after 4 years, the amount of Bitcoins that are produced is halved. That means that as the amount of Bitcoin produced into the system or awarded to miners halves, there's a supply shock. And this supply shock is often what you typically is reflected in sort of the parabolic rises in price. So over time, Bitcoin actually acts as a deflationary asset. meaning that the value of each Bitcoin goes higher as demand with it also increases. This is due to the fixed supply, as I mentioned previously, but also the amount of Bitcoin produced as rewards for miners securing their records also halves. You know, the inherent inflation of Bitcoin gradually goes down, and not anyone can change this trajectory. This is written hard-coded in Bitcoin network. So this means that by the end of 2140, Bitcoin's circulating supply has reached 21 million, and no one can change that. Now, moving on to the last few parts, which is growing debt. Well, how does Bitcoin help this? Well, Bitcoin can act as a hedge against the global financial collapse. Now, industry experts mention that actually at 10 million per Bitcoin would provide a sufficient reserve to alleviate the world's debt burden. Now, Bitcoin roughly would be worth about 180 to 210 trillion. Assuming that the world debt has reached 500 trillion at the same time, Bitcoin would represent a 40% reserve against this debt. This means that at 10 million per Bitcoin, it could provide the world with a stable currency, replace sovereign currencies, and act as the world reserve currency that is incapable of inflation or deflation. This would represent the ultimate store of value. Now, how does Bitcoin impact and solve rising inequality? Now, Bitcoin actually opens access to anyone to become their own bank. Now, as I mentioned before, in the world, there's about 1.4 billion people that currently have access to banking, credit, and international capabilities. However, 6.5 billion people around the world operate in cash-based societies with very little access to banks or international resources. Out of the 6.5 billion people, 2 billion of these people are already on the internet. With a simple application download, they can immediately become participants in the Bitcoin network because all you need is just access to the internet. Bitcoin opens the possibility of connecting these 2.2 billion people, but also the rest to the world of financial monetary inclusion, where people can connect to a world of international finance that is completely peer-to-peer without the need of a third party. Now, the last but not least is inflated asset prices. Now, how does Bitcoin solve inflated asset prices? Well, Bitcoin is a hard asset, is a non-correlated asymmetric return asset that has performed well during times of global instability. Now, the recent example is also is obviously COVID-19. Why would you own a stock pegged to a fiat currency which may collapse in the next global recession? Why not own a non-correlated asymmetric return asset that actually does well in times of global instability and global recessions? Now, to back this up with some hard evidence, I'm going to use a stock to flow model, which was created by at 100 trillion USD, which is a big prominent figure within the Bitcoin ecosystem that has created essentially a stock to flow chart, which represents a stock to flow ratio that measures the relationship between the existing supply of Bitcoin to sort of the commodity like gold, silver, platinum, oil, and its annual production flow. So in short, basically what 100 trillion USD has shown in this graph is that because Bitcoin is limited in supply, similar to gold and similar to other commodities, as demand increases, the value of Bitcoin naturally would also increase. Now, he has jotted down a trajectory over the next 5, 10, 15, 20 years time. And given this graph, it's up to 2021 to 2022. The graph kind of predicts that Bitcoin will be probably worth between 100,000 to 250,000 in the next 4 years. Now, this model is based on stock to flow, so there's obviously limitations to this. But I kind of wanted to show you the dynamic between how Bitcoin as a hard asset, as an asset that can't be printed, can act similar to a commodity in a way, and the trajectory of where that could go in the future. Now, I kind of also want to touch on Bitcoin misconceptions. So there's a lot of misconceptions about Bitcoin, and this is probably what most of you have heard from mainstream media. Well, Bitcoin is used by criminals. And actually, that's wrong. Very small percentage of transactions used by the Bitcoin network is used for nefarious purposes. There are far more bad actors that use fiat sovereign currencies to transact. Some people would say, actually, Bitcoin's illegal. Exchanging Bitcoin with anything else is similar to barter exchange, which is actually legal. But bear in mind that most countries would view this as a taxable event. So obviously, look at your own country's taxation for capital gains. The third is Bitcoin doesn't have any intrinsic value. Now, this is a common misconception. Nothing has intrinsic value. If you think about it, money has emergent value. It emerges from our need to account, store, and exchange value in scale. Bitcoin is software enabling permissionless, trustless, censorship-resistant value transfer on a global scale. In fact, fiat money doesn't have any intrinsic value because fiat money is backed by faith and confidence in government and central banks. Bitcoin, you're trusting the network, you're trusting the software, you're trusting the algorithm. Bitcoin is similar to a stock or share. Now, this is also a common misconception within the industry. Bitcoin is not owned by anyone. It is actually owned by everyone. It operates by simple mathematical rules that everyone who participates in the network has to agree on or actually agrees on. This means that Bitcoin does not follow a company stock or share. It doesn't have a CEO, it doesn't have a board of director, it doesn't have an authority that's governing Bitcoin. It's actually for the people. Another few misconceptions are Bitcoin wastes too much energy. Now, actually, Bitcoin utilizes renewable energy resources and actually energy resources that are lost in society. About 50% of global energy is actually lost, and Bitcoin uses this lost energy. So technically, Bitcoin doesn't actually use more energy like most mainstream publications are saying. A recent report that mentioned actually 78% of Bitcoin mining energy is actually from renewable sources. So this actually doesn't negatively impact society, or at least environmentalists, in that way. Bitcoin is too expensive. This is also a big misconception within the industry. You can actually buy fractions of a Bitcoin, and actually Bitcoin goes up to 8 decimal points. So the smallest unit of Bitcoin is referred to as a Satoshi, which is 0.00000001 BTC or Bitcoin. So what this means is you can actually buy fractions of a Bitcoin. You don't need to actually own a whole Bitcoin. Another common misconception is Bitcoin is not money, or Bitcoin is not a store of value. It's not a medium of exchange, and it's a poor unit of account. And some people actually say, due to the price volatility, Bitcoin is a speculative asset. Bitcoin is not generally accepted. There's a lot of high cost. Bitcoin, there's just too many decimal places. These are all arguments that actually have limited or no weight in the premise. The fact that Bitcoin price is volatile and speculative does not mean that it will not eventually become a world reserve. No, you actually have to crawl before you can walk. Bitcoin has only been here 11 years. Imagine what it will be like in 100 to 200 years. it won't be as volatile as it was then. And actually, over time, Bitcoin's volatility decreases as actually price increases. Bitcoin is a poor medium of exchange because it's not generally accepted and it has high costs. Whilst it's not generally accepted, it's the same concept as the previous notion is, we're at a stage where the technology is actually quite difficult to understand. There's not many people that actually use it to transact because they are essentially holding it. These are all conceptions that actually they have very little weight because over time, Bitcoin is going to be generally accepted. Bitcoin will generally be used as transactions moving forward. And the last is Bitcoin's a poor unit of account. Now, actually, Bitcoin has 8 decimal places that you actually can open up a lot more opportunities. Imagine having 8 decimal places, you can actually open up doing microtransactions. You can do small scale transfer of value at a global scale. So there's a lot of opportunities that you can open up with this unit of account. So in summary, Bitcoin has a fixed money supply. Bitcoin is limited to 21 million coins, therefore immune to money inflation or quantitative easing and government manipulation. Bitcoin is global money. Bitcoin is global, non-political money that transcends borders. Bitcoin is near private. Bitcoin is fungible and transactional pseudonymous, meaning that they are near immune to sovereign censorship or confiscation. Bitcoin is permissionless. Bitcoin is trustless technology, meaning that anyone with an internet access can take part in without needing anyone else's permission. Bitcoin is decentralized. Bitcoin has no central issuing or verification authority. There's no Bitcoin corporation, there's no CEO, there's no place to shut down. Bitcoin is completely globally decentralized. And last but not least, Bitcoin is becoming more widely accepted. There's growing numbers of businesses, entrepreneurs that are accepting and basing new business concepts on Bitcoin. Bitcoin is truly for the future. Bitcoin unlocks new opportunities that are not otherwise seen and existed with the fiat money we have today. What I mean by this is that Bitcoin is global, digital, programmable, transatlantic money. We are only scratching the surface of Bitcoin. When you move this type of interference, when you move government interference at a fundamental level, you can unlock a lot of exciting opportunities. We are actually at the same point in humanity where we just discovered gold. Gold was shiny, not gold is non-corrosive, but it took humanity many hundreds and thousands of years to innovate, integrate gold within our lives. This is the same with Bitcoin. Bitcoin is at the stage where we've just discovered gold. Bitcoin is money 2.0. Bitcoin is durable. It doesn't exist in physical form. It can't wear out. Bitcoin is programmable. It means that you can actually build whole digital ecosystems. It's interoperable with Internet of Things, with smart machines, with augmented reality, with artificial intelligence. There's a lot of things that you can do with Bitcoin that you can't do with fiat currency. And Bitcoin, I think one of the most important things about Bitcoin is that it's transatlantic. It pushes innovations to the edges of the network. There's no need for permission. You can use Bitcoin at any point, anywhere, at any time in the world, but also at other worlds as well. So we're thinking about other solar systems, other planets. Bitcoin is a truly global, futuristic money that has only just got started. Now, I've hyped you up. How do you actually buy Bitcoin? Now, Bitcoin is subject to high price fluctuations. So obviously, there's always a disclaimer in this. All trading carries risks. So only risk capital you can afford to lose. But where you can actually buy Bitcoin is, like we mentioned previously, you can buy Bitcoin on an exchange platform. for example, like Binance.com. Binance.com is a crypto asset marketplace that exchanges fiat currencies into cryptocurrencies and vice versa. Binance.com was started in July 2017 and leads the crypto asset industry by trading volume and is used by millions of users in over 180 countries worldwide. It's a low-cost fee provider. We have a diverse portfolio of coins to choose from. We have high order book liquidity. We have fast execution times. We're protected by the safety fund. All of these aspects are what differentiates us from our competitors within the market, but also has allowed us to establish a leading position in the market. So actually, how do you buy Bitcoin on Binance? There's 3 easy ways to buy Bitcoin on Binance. First, you have to register your account. Second, you have to verify your account. And third, you buy using a credit or debit card. So let's go on the first stage. So first, you register your Binance account. Click on the, go to Binance.com, click on the register now button, or use the link below here to get 10% discount on, spot trading fees. So once you register, you'll be asked to provide an email code to verify your account. And then once you've verified your account, then you can actually start to move to actually verifying your identity. So to verify identity, you click on the profile icon, you go to identification page, you then are directed to the identification page to then verify your identity. Verifying your identity is split into 3 different sections. You have to provide basic account information, provide and upload your selfie and ID documentation, and then this gets sent to our system to review. And essentially, once you're verified, you can then be able to buy using credit and a debit card. So to buy Bitcoin using a credit debit card, simply go to Binance.com, hover over buy crypto, make sure you use your local currency, in this case is GBP, and then you press credit debit card. And that's pretty much it. You enter the amount that you want to buy, you enter the coin, and then you enter the card details. Now, this is a simple illustration on actually how it looks. On the right, you type in, for example, you want to buy 50 GBP worth of Bitcoin. You enter the card information. You then enter, your address, your city, your postal code. You enter the card details. Then you accept it, and then your Bitcoin then is transferred to your Bitcoin wallet in your Binance.com account. And that's actually how to buy Bitcoin. It's very simple, really easy, and I suggest everyone to create and register a Binance account to be able to access a wealth and depth of portfolios to choose from. Now, last but not least, I want to go over Bitcoin glossary. Now, this is all the common phrases that are used in the market. I'm just going to give you an insight into the top used terminologies, and obviously you can find a source to the right to find more terminologies. So the first, fiat, we mentioned this before. Fiat is a government issued currency. This is a local currency like a pound, American dollar, the euro, the Chinese yen. These are currencies that are government issued and backed. Alt is typically referred as altcoins, and these are coins or cryptocurrencies that are not Bitcoin. So anything that is not Bitcoin is considered an altcoin. This is typically referred to Ethereum, to BNB, to Litecoin, etc. FUD is another terminology that's used within industry, and it's typically referred to as fear, uncertainty, and doubt. FUD is used in a way to suggest that a part of information is being targeted to bring about negative connotation. So when you read a mainstream article that says Bitcoin is a scam, that is typically referred to as a FUD article, because the article is there to promote fear, uncertainty, and doubt. FOMO is also another term, which is typically referred to as fear of missing out. Now, FOMO happens when the market is going quite bullish, the market price is going up, and you have a fear of missing out, and that you actually buy into that currency because of fear of missing out. It's quite self-explanatory. HODL, which is typically referred to as hold on for dear life. Now, this is typically the opposite effect of FOMO. HODL is essentially when the price is actually going down, and that HODL is used to signify you should actually hold it instead of sell it. Build, which is essentially what its name is just keep building. So this is typically referred to businesses and companies that are within the crypto industry. They typically use build to say, we don't care about the price, we are just building for the ecosystem. Seifu, which is typically referred to as funds are safe. This is again typically reference to exchanges or crypto businesses where they hold customer funds and that funds are essentially safe, that there's nothing to worry about. So funds are safe. That's what it's typically referred to as. ATH or ATL, which is typically referred to as all-time high and all-time low. Now, all-time high is reference to price. So all-time high could be the price at its highest that's ever been, and all-time low is price at its lowest at its ever been. And obviously there's a time period for each individual one. So you can say, Bitcoin has hit all-time high within the past week. Or you can actually say Bitcoin has it all-time low for the past month. So there's also different time frames that you can use it with. DYOR, which is typically referred to as do your own research. This is typically used to new users within the industry, essentially telling them actually don't invest in coins that are hyped up. Invest in coins that you have done your own research in and you feel comfortable investing in. AML and KYC are typically related. So AML is anti-money laundering and KYC is know your customer. These are typically compliance protocols within the crypto industry that you use in centralized exchanges such as Binance.com. And that's it in terms of the glossary.